Hello and welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. A jolt for DLF. The Chandigarh High Court stays the company from selling and advertising its latest luxury residential project in Gurgaon. HDIL shocks the street by taking a 442 crore rupee write-off. This after the Mumbai International Airport terminated its slum rehabilitation contract. 2G tainted DB Realty is bouncing back. Its upcoming launches in Mumbai will be worth a whopping 25,000 crore rupees. DLF shocked the street by reporting its first ever quarterly loss. The country's largest developer in the fourth quarter of FY13 announced a net profit of 4.19 crore rupees as against a net profit of 212 crore rupees in the same quarter a year ago. This wasn't the only bad news for DLF this week. The Chandigarh High Court has put a stay on DLF from selling, marketing and constructing its latest luxury residential project in Gurgaon, The Crest. This after the RWA Association of one of DLF's projects, Park Place, filed a writ petition alleging DLF was encroaching on its condo property. The Crest is located at Gurgaon's famous golf course road and DLF hasn't launched a project here for over 5 years. For over a decade, we've seen frenzied real estate activity on this road, the genesis of which can ironically be attributed to DLF and the golf course it built here in 1998. The Crest is an important high-margin project for DLF. It's already sold 250 apartments and DLF in the past has said the Crest will play a vital role in debt reduction. With a basic price of 15,500 rupees a square foot, the starting price of a 2 BHK is 3.4 crore rupees and goes all the way till 6 crore rupees for a 4 BHK. This does not include charges like PLC, parking, etc. Penthouses are more expensive with a basic price tag of 16,500 rupees a square foot, costing up to 10.3 crore rupees. Earlier this week, I caught up with DLF's Executive Director, Saurabh Chawla, to make sense of all of these developments. Mr. Chawla, DLF's appeal to the Chandigarh High Court to vacate the stay on this ex parte order has not been granted. In fact, the District Town and Country Planning Department has been told to file its replies. What does all this mean for DLF and its planned launches in Gurgaon?
Well, number one, it's an ex-party order. So, the other party has to really put the facts on the table, which will be done. And I'm sure the courts will take a considered, opinion based on facts that are put on the table. So, being sub judice, I would not really like to comment on Crest, but we are very confident of where we stand on that particular issue, and we believe that it will not impact our launch plans and businesses going forward.
Okay, but the fact is third-party interests have been created. DLF has billboards all over Delhi and Gurgaon saying the Crest is sold out. What do you want to tell your buyers? I'm sure they must be feeling quite jittery with this development.
Well, all that I would like to tell them is that this is not the first time that vested interests have moved against DLF. We have the credibility of last 70 odd years in this marketplace, and never has any investor or customer been at loss. So we will stand behind our customers. It's a due process of law. Over the last few years, in a very litigious environment, we have stood our ground and we have demonstrated to the market that we will meet our obligations to customers. So I don't think the customers really have to worry about anything.
It's actually very interesting to hear you say that, because it's your old customers that took you to the Chandigarh High Court in the first place. But in light of all of these developments, you're still going to go ahead with launches in Gurgaon. Also, I'm speaking to you for the first time this fiscal. What's your launch pipeline?
Well, the way we are working ahead is, Nayantara, is that the old is, as Chris Christopherson said in his song, old is dead and gone. So, and here the future is where we want to do launches anything between 8 to 10 odd million square feet. These are high value, high margin launches that will be happening, continue to happen, and we want to reach a steady state of EBITDA margins double of what they are today in next 2 to 3 years. That is what our plan is. It is a very conservative plan with very low-hanging fruit. Our focus is, to go back to the core, which we have done quite successfully. It will not be a Q&Q story. So again, I want to guide the investors that DLF is not a Q-on-Q story. It is an amalgamation of almost 15, 20 odd projects across the country. Very difficult to really pinpoint on the accounting capture of all the aspects of the business. We are a medium-term story, so you have to look at a 2 to 3 year play to really fully realize your investment in any DLF stock.
And what's the pricing strategy for these launches? Don't give me exact numbers, but you said high margin, high value. So what kind of ticket prices are we talking about? And again, you don't want to relook at launching projects in Gurgaon, given the relationship between the company and buyer associations is still so stormy.
Yeah, I would not like to highlight the exact strategy, but there will be, I would say, Gurgaon will continue to play a role in our plans forward. So both in phase 5 in Gurgaon and New Gurgaon, those launches will come for the previous launches, where phase 1 of bookings were done. We will have the second and third phase of bookings happening as we go forward. So we are not going to be in a rush to sell out projects. We will be phasing our sales in order to capture or mitigate the commodity inflation that keeps hitting Indian markets as such. Important areas also rest of India. We intend to be quite aggressive in launches in many other parts of the country. The big segment of our story now is the rental business. The current rental run rates of about 1700 to 1800 odd crores. We expect them to go up to about 27 to 2800 crores over next 3 years. It's again a very low-hanging fruit for us. Most of the capital expenditure has happened.
The Park Place RWA that has got the stay at the Chandigarh High Court is the same association that, along with other DLF Buyers Association, had gone and won a high-profile case against the company at the Competition Commission of India. The competition watchdog had ruled in favor of the associations and slapped the company with a 630 crore rupee penalty, the largest fine ever imposed by the CCI. DLF's appeal at the Competition Appellate Tribunal is still pending. These buyer associations had claimed DLF had signed one-sided agreements that had been arm-twisted into giving the company consent for increasing the number of stories, and alleged DLF of abusing his dominant position by charging almost up to 18% interest for late payments while compensating a much smaller amount for projects being delayed by over 2 to 3 years. With the fight between DLF and buyer associations back in the spotlight, we thought it's an appropriate time to touch base with the CCI chairman. Mr. Chawla, DLF's appeal is still being heard at the Compat. Till then, can you tell me, is CCI doing anything at all to ensure real estate developers don't continue to sign one-sided agreements with buyers?
It depends on the final decision of the Compat, but they are supposed to, in terms of our order, which has not been stayed by Compat, they are supposed to cease and desist from the practices which were found violative under that in that particular case.
After the DLF order, CCI was flooded with complaints against real estate developers. Till last September, CCI was investigating as many as 70 real estate companies, including Unitech, Parsonath and Omax, for entering into these one-sided kind of agreements with buyers and then colluding with one another to arm twist buyers. What's the status of your investigation? How many companies are currently under scrutiny?
There was one matter where the number of real estate companies were involved. So to look at practices and to see whether all of them follow the kind of practices which are violative of the Competition Act, the matter was sent to the Director General for investigation. The investigation is going on, and since it involves number of companies from all over the country, I suppose it will take a little more time.
I understand CCI had sent many notices to developers, including, in the NCR, Supertech, Gorsons, Omax, etc., asking these companies about their operations and project delays. What's happened since then? Companies say they have responded to these notices.
See, the notices, etc., and the investigation is done by the Director General. So I'm not aware of the actual status or details at this point in time. And we also follow this practice of an arm's length relationship between the DG and the Commission, because he's supposed to be the investigator and he's the sort of prosecutor who presents the evidence before the Commission. So once he's ready, it will come to us.
Mr. Chawla, do you honestly believe that the CCI is the right forum for all of this? Real estate companies argue buyers should be approaching consumer forums. How would you respond to that?
Well, we come in if there is abuse of dominance, which the Commission had found in the case of DLF. But that's true. This is not really going to apply to many other builders who may not really be dominant in the area in which they are operating. They may not be such big entities. So therefore, the forums are the consumer court, but also because there is huge amount of consumer interface and sensitivity from the social point of view, it may be a good idea to have a separate real estate regulator, which I believe the government is thinking about.
It was also a bad week for Mumbai-based HDIL, with the stock making a fresh 52-week low. HDIL shocked the street when it announced a 442 crore rupee write-off on the back of the GVK-run Mumbai International Airport terminating its slum rehabilitation project. That massive write-off led to HDIL posting a loss of 280 crore rupees in the fourth quarter of last fiscal. HDIL announced it has been evaluating legal recourse ever since it received that termination notice in February. The realty firm believes this notice is not legally tenable. MIAL had entered into an agreement with HDIL to rehabilitate an estimated 80,000 slum dwellers residing on 276 acres of airport land. The project was to be completed by 2011, but not a single dweller has been shifted. This as the government did not complete the mandatory survey to identify eligible ones. The government, in fact, is yet to even fix the eligibility conditions. MIAL says it had issued a notice in June 2011 and invoked performance securities prior to terminating the contract with HDIL. On that note, we'll slip into a short break. On the other side, DB Realty has gone through a rough patch, but the company says it's bouncing back. Its new launches will be worth a whopping 25,000 crore rupees. An exclusive interview when we return.